Hello all. So 2020 is a year of disruptions and a lot of businesses are going through transformative phase, and with this pandemic of COVID-19 and the whole world has gone remote, and work from home has become the norm. Video collaborations has become the norm, and this concept of work from home is going to stay here, and it's eventually going to transform many businesses and the way we do businesses, the way we operate and control the conferences. Everything is going to change. And when this paradigm shift is happening, there are a few companies that's worth noting down for us as investors, especially to put it in a radar so that we could find some transformative businesses in the conferencing video collaborative format. And there are some companies that's benefiting huge by the impetus of this driving force of coronavirus. And I wanted to use this presentation. I picked three companies which are gaining immensely due to this transformation and this remote work and work from home connectivity. And let's get into these three companies and understand what they do, how they're going to benefit from this transformation. So these are the three firms I put together. A quick snippet views. This is not an investment analysis per se. I mean, it needs a more deep dive of analysis of balance sheet and everything. But what I've tried to do here is just to bring into investors' attention that there are these three companies which one needs to keep track of and do their own analysis and financial consulting before investing. But this is just to keep it in radar. So the three companies are Zoom, Microsoft Teams. Teams is another collaborator, owned by Microsoft, and then there is Slack. So two of these are fairly new companies, which are very small in size, or not small, medium-sized companies. It's become medium due to the recent re-ratings. And one is Teams, which is the combination of erstwhile Skype, which Microsoft acquired, I think 2011, and they renamed it as Teams for enterprises. So let's look into all three and see where it stands. So the first one is Teams. That's a symbol. And Microsoft bought Skype in 2011 for $8.5 billion. And later Skype was reframed as Microsoft Teams, bringing together video collaboration with document sharing platform. So it's a comprehensive collaborative platform that includes chat, videos, meetings, file sharing, everything. So it's a combination, I would say, like, where you can share files, you can view people, you can do a video collaboration, do a chat online, everything. And this team platform comes free actually with Microsoft Office 365. It's a complementary platform that comes along with Office 365 subscription license, and that's been a real challenge for the new age players in this industry, like Slack, where they have to somebody has to pay up the license for Slack, or Zoom for that matter. But Team comes along with Microsoft Office 365 subscription. And Office 365 is pretty much with everyone across enterprises. Almost everyone owns it, other than this new age players and small and medium businesses who do not, who doesn't want to adapt into Office 360 and the whole suite of products from Microsoft. So Teams but lack a lot of personal touch in terms of when it comes to a family and social hangout culture. I wouldn't say they lack the touch, but it's more of a lacking of the usage in these aspects, like personal, family, and social hangout, for which the other two, like Zoom and Slack, are score points and through their channels based mechanisms. So both Zoom and Slack has channel based categorization, but even Teams has channels. But the collaboration is more, the features are more prominent in Zoom, and even Slack for that matter, in terms of both are developed specifically for this purpose, and rightly so, they have a lot of additional features and integration capabilities. So Teams has a good subscription based subscription based and cloud hosted platforms. I mean, all Azure hosted, and which has seen tremendous rise in new user generation due to COVID-19 work from home culture proliferation. As I said in the beginning of this meeting, the work from home culture proliferation is even more immense in the last 2-3 months due to this COVID-19 work from home. I mean, the driving factor is that, but even in future, once this culture is established, it might be easy for some enterprises to think through and adopt easily through online and video collaboration. and they have seen immense growth in subscription of new users in the last couple of months, and that is evident in the numbers. The number speaks for all. So it has reached 44 million daily active users for Teams, and that's a net doubling from just 20 million users on last year, as on last year in the platform. So they're just doubled in 3 months time. I mean, this more than added more than the total existing users in just 3 months time due to this work from home remote connectivity. So next is Zoom, which is a very scalable and powerful video collaborative platform, with mobile being a highly utilized channel in Zoom. This can be understood from this statistics. Daily US mobile user volumes rose to a record 4.84 million users in 2020, up around 150% from last year. So this is three times more than the daily mobile active users of Teams. So Teams has not been that adopted through the mobile channel, whereas Zoom is. Zoom video communication saw staggering growth in the usage of its platform in 2020, as the COVID-19 pandemic has forced, global offices and global schools going remote from home. Across countries, this is being, utilized and adopted for schooling, for office usage, everything, for all kind of video collaborations. So Zoom's daily active users jumped from 10 million to over 200 million in 3 months. That's been a phenomenal run. So that's a force multiplier we have to see here. So it has grown 20 times the user volumes, and no wonder the market capitalization in stock had almost doubled and jumped more than 1.5 times in the last 2 to 3 months. And Zoom is not only adopted across enterprises, it's deeply entrenched in the social, education, personal, and professional arenas for video collaboration. So Zoom has a huge following among schools and students, has an attractive free usage policy as well, just like Teams. But Teams comes along with a license of Office 365, whereas Zoom could be stood up free by anybody, but it has some limit up to 40 minutes or something of free usage, beyond which it gets into the paid channel. And it has seen an increase in the total number of customers, that is paying more than $100,000 revenue. It has 641 customers, and it has seen a tremendous growth in that. It's grown by 88%. That is the number of customers who are have it's giving or generating more than $100 million revenue for Zoom has grown by 86%. That was 2019 story, but in 2020 it could be even growth of 150, 200%. We don't know. We have to wait for this year to complete. And the reason we all know, because of the COVID-19 and work from home culture. Now, their cash flow, they are cash positive. So the cash flow from operations are $152 million. It was in 2019, was up three times in 2019 itself, more than 2018. And, we can imagine what kind of growth they will have in 2020. It could be up 5, 6 times. We don't know. Now, free cash flow was around $113 million, and roughly around 5 times more than last year. So, highly cash generating company, free cash flow, not much of capital is required for their growth, and they have been growing pretty good. And, Zoom has a total market capitalization of $34 billion. It has doubled in the last 6 months or 3 months, because of which has reached this level. But it was around $15 billion company, which was a great time to invest. And the price to sales is nosebleed valuations at this point. I mean, almost 30 times forward looking 2021 earnings. I mean, 2021 sales. So but look at the growth also, and the high gross margins. Their gross margins is 90%. They're cash generating. They have a cash of $825 million, and as of 2019 they might be having even more now. Plus, they are consistently generating cash of roughly 150 to $200 million as of now, and growing 100% almost. So one can imagine how much of a value they are creating in their platform. Number of customers are tremendously increasing, and I think down the line, 10 years down the line, this could be one of the most powerful platforms that could exist as a video collaborative platform, and would grow. They might continue to keep up this growth, especially with the culture and mindset changing to adopt more remote connectivity options. I think there's a long way, but they could see the stock had seen some corrections recently due to the security issues that spiked up in the last couple of months. Companies like SpaceX has stopped using Zoom. A couple of schools and colleges opted out of Zoom through as their collaborative platform. So the CEO is Eric Yuan, who's a very visionary guy, and he's much revered. And people, he came on the platform, on the channels, and committed and agreed to that security flaws that exist and has committed to work on that and come over the security issues to put the right trigger in place. So I'm sure he is a visionary CEO and he would put the required steps in place. And there could be some near-term corrections in the stock, but long-term, looking at it, all of these three platforms could have a total addressable market such a way that all three could coexist and grow still. So one thing we need to understand is that Zoom is more of a video collaborator, and whereas Slack is it's more of a platform where the documents are being exchanged, the messages are being exchanged based on a channel mechanism. So you can see in the slide, Slack is predicated on the future of paradigm shift from email to channel-based messaging platform. So you could see here different channels existing with this a sample Slack platform screen. There is a channel called Culture. There is a channel called brainstorming, business ops, different channels. So users gets added to the different channels and they can collaborate, communicate through messages. They can share files. Look here, there is a file being shared, for building policies and procedures. Similarly, they can share videos, photos, and all of that. It's more of a document communication platform, collaborative platform where people don't have to depend on emails. So, and their fundamental concept is to replace emails eventually. So they are in the right track because there are a lot of overheads, in terms of following an inbox Outlook based email communication. So they operate in channels within enterprises, and they also have outside enterprises the ability to collaborate with outside enterprises to share messages and documents. So they finished 2019 with 110,000 paid customers, and 893 customers spending more than $100,000 annually. So roughly it's in the same lines of Zoom. So people, the number of customers who are spending more than 100,000 annually is almost same, 893 here for Slack. And we saw in the earlier slide, Zoom had around 640 customers. They could maybe caught up with Slack already on that front, but both are different kind of firms, but different kind of platforms. Zoom is more of video collaboration, but Slack is more of messaging and communication and sharing of document collaboration. So both Slack as well as Zoom are new age companies. They just did their IPOs, and both have very good management and the skin in the game leadership for both Zoom and Slack. Now, Slack has again similar revenue range like Zoom. It has around $630 million and increasing by 57% year on year. That was in 2019. I'm sure this year their growth would be even more fast. It could even be 70, 80%. We don't know. I have to wait and see through the year, but it's got a phenomenal impetus in the starting of the year. The first quarter has shown transformative growth, and so we can expect a lot of revenue this year. Maybe it would touch even 800, $900 million. Now, net cash used in operations was $12.5 million, which means that they were burning cash. Unlike Zoom is more of cash positive and they are self-sufficient to fund their own growth. Now, the 2% of total revenue has been spent in operations by Slack, and that is compared to, but there is a good improvement because they spent almost $41 million in 2018 on their operations. That was 10% of total revenue. So they are gaining benefit from that, operating leverage coming in, kicking in. I think maybe next year they might turn cash positive. Free cash flow is negative $62 million or 10% of total revenue, and it was again 97 million loss last year. So that is also improving compared to 2018, and 2020 could be even better. So Slack has strong integrations, even Zoom for that matter, with all SaaS providers and infrastructure providers. They are cloud-based. They could integrate with Salesforce, HubSpot, Tableau, all different kinds of SaaS products, whether it's HR, finance, marketing, Salesforce, or data analytics, reporting, business intelligence like Tableau, and all of that. So IBM just chose Stack as a collaborative platform for its 330K employees, which is a significant feat for Slack, gaining such a big customer. And Slack has a total market cap of $13 billion, valued at 21 times sales. That's also super high, but compared to Zoom, it's not nosebleed valuations. But growth is different for both the companies. If you see, Slack is growing at 50 or 60%, Zoom is growing at 90 to 100%, and gross margins are very high for Zoom, and Slack also has got pretty good margins that way. Now Zoom is got its advantages in terms of the fastest growth, high gross margins, a lot of cash in the books, and it's cash positive, generating free cash flow and self-sufficient growth. Whereas Slack needs still burning cash, still not cash positive. Maybe they might turn cash positive this year, next year. But overall, 10 years from now, as I said, when we look back, some of these platforms could have been big platforms or big widely scale used adopted video collaborative, where it's Zoom, or messaging document collaborative, where it's Slack, or even Teams, which might be a big component of revenue for Microsoft. But putting it all together, three companies from investment angle, I feel all three are great platforms. Really depends on valuation. Zoom might correct a bit in the near term because of the security issues and all. Slack might be little slow on the growth compared to Zoom, but Microsoft. I like Microsoft as a concept because they have all the cylinders kicking in. Whether it is cloud, they are growing. Cloud is growing at 35-40%. Azure has almost same market share as that of AWS, almost similar, catching up fast. And their gaming zone is growing very fast for Microsoft. And now Teams is seen doubling, almost growing 100%. So Microsoft is doing a phenomenal job, and this is a company with $1.1 trillion market capitalization. They are firing all cylinders, and I don't see a reason why Microsoft should be anyway a subnominal, investment idea for that matter. And Teams is going to be a big part of their growth. So overall, these are the three main collaborative remote connectivity ideas I could think of. There are other businesses as well that are going to get immensely benefited. We might cover in a different session. Some of the examples are DocuSign, because people, the requirement for people to sign hard copies and the documentation, legal formalities have all gone online, and DocuSign might gain benefit immensely from that. Similarly, Dropbox is another stock I could think of, which is another firm I could think of, which will go gain immensely from the collaborations and remote connectivity, and even data center business are going to gain benefit. We will cover each of these ideas in different sessions, but today's ideas I wanted to cover in specifically targeting on the collaborative platforms. Hope this was useful. Thank you.